at each stage of the production process. All right. You also have a property tax is also an indirect tax, and that is levied on property land. All right. Stamp duty as a tax paid when checks are drawn. So it has to do with no monetary instruments. Yes, in the financial market or the money market. Yes, when you put open an account with the bank charges you for the interest that you earn, and it is referred to as stamp duty. Whenever you join checks and operate in your current account, the government charges you what is called a stamp duty, a tax called a stamp duty. Really a tax on the interest and the benefits you are obtaining through your money invested in the bank. All right. The tax, now a tax on legal documents as well. So it's not only just tax on checks and so on, but the stamp duty is also charged on legal documents. Now it includes those related to the sale or transfer of property. So when your lawyers are going to be doing some transaction for you in the transfer of property, real estate, patent, securities, that is, and copyrights, stamp duties are charged on these different aspects and business activity. Now, what are the benefits of direct taxation? We want to share that information with you. The benefits and limitation of direct taxation. Let's look at the benefits now quickly. It is equitable. The burden of direct taxes cannot be shifted. Hence, it's equitable. Right? Equitable sacrifice can be attained through progression. It is economical. So the direct taxation is economical. That means the cost of collection of direct taxes is low, right? The collection of the direct tax is low. Why? Because it is tax that is taken at source. So the government doesn't have a lot of money to spend to collect those taxes. And they are mostly collected at source, as I said before. The other benefit is that the tax is certain. Direct tax is certain. You take it before the employer receives the money. So in the case of direct taxes, the payer know how much is due from them and when, and the authorities, of course, know the amount of revenue they expect. Limitations, quickly. Now the limitations. One, for direct taxation, it can be a disincentive. If the taxes are too heavy, they discourage savings and investment. A high level of taxation discourages investment and enterprise in the country. So if you are taking too much, then people will not have enough to invest or to save. It is evadable, right? The assessee can submit a false return of income and thus evade the tax. That is why the direct tax is called a tax of honesty, right? Let's go to indirect tax. Benefit here, everyone can contribute. Unlike income tax, yes, which has to be paid by individuals in certain income bracket, indirect tax have to be paid by each and everyone. You cannot escape indirect tax. For example, purchase tax. Once you are purchasing something, you will have to pay for it. They cannot be evaded, right? So indirect taxes cannot be evaded because they are part of the price of the commodity. So anyone who buys the commodity will have to pay. Let's look at the limitations now. Indirect tax can be regressive, right? Since indirect tax is the same for both the rich and the poor, it can be deemed unfair to the poor. And then they raise the price of commodities. Sellers cannot always calculate and collect the exact fraction of the tax applicable on all commodities that they sell, and so they may not calculate it right and cause you to pay more than what is required. All right. So I want to thank you for going through this lesson with us. And if you like it, please click the like button. And of course, we invite you to show your love to this process that we're going through in Business Matters by clicking the subscribe button, and you will see when we will be uploading a new video that will be helpful to increase your knowledge on business matters. Thank you very much.